Hi, everyone. We are here again with TJ Ebert from Guidance Mortgage. And yesterday we had technical difficulties because of my phone, so we're going to jump right back in. And TJ, yesterday we were starting to discuss why people don't always get are hesitant to get their pre-approval and kind of wait till last minute to do it sometimes. Did you have any thoughts on that?
Yeah, I do have some thoughts, and this is more my speculation from conversations I've had and just different items I've gleaned from individuals I've spoken with. And this is more pertaining to first-time home buyers who maybe are thinking similarly along the lines of getting a car. That the process for a car loan for quite a few individuals is that they're searching online or go to dealers, find the car they like, and then once they have the car they like, they go to their bank, credit union to submit a loan pre-approval for that vehicle, or they do all the financing right at the dealership. So it's something that could conceivably be done in matter of a couple hours or for sure a weekend without much issue. Whereas a home loan pre-approval could possibly be done in the matter of 1 weekend, but the ideal would be having a few days for the buyers to be able to submit their information, upload documentation, and then another day or two for me to sift through that, to look for gaps or additional questions that an underwriter might have, and so that there can be more conversation between me and the buyers to make sure that the pre-approval is fully completed, and then figuring out exactly what that pre-approved amount is. And once that pre-approval is complete, then going back armed with that pre-approved limit, going back talking with your realtor and start looking at homes at that point. So
I
it's
Sorry, go ahead.
maybe a little bit different of a process than buying a car.
And I think, like when you're buying a car, you usually don't have people competing with you for the same car, right? And so, people start thinking in terms of
Mm-hmm.
that, like you might be competing with other people, or even if there's not somebody that same day making an offer, by the time you pull all your documents together, someone else might also want to be compete with you. And so it's a kind of another step into making you the buyer that can have the most leverage to competing for a home. Um, and I think one of the things you said too,
Absolutely.
one of your process you really like to educate, especially first time buyers, right? And so when we're rushing through that, does that kind of hurt your ability to educate people?
It it really can. It can limit it can really truncate the experience for both ends of that pre-approval interaction. As we'll see, as we'll get into here, I'm going to lay out what my general flow is and how I like to handle buyers, especially first-time buyers. And if it's something where it's a rush pre-approval on a Friday night, looking to get an offer out the next morning, most of that education or the ability for both sides to ask deeper questions, most of that gets cut out, and it's really just a brass tacks of we're doing the bare bones here, but it's not necessarily what I prefer to do. And on the buyer side, it's going to be a limited experience in terms of fully understanding and being they have the opportunity to ask questions and to be educated on certain components of the process.
Yeah, and I think you know, it's kind of like a chicken or the egg full circle thing. So first time buyers are maybe like maybe they think it's going to be uncomfortable or something, so they put it off to the last minute. But then they're really hurting themselves because they'll feel a lot more comfortable in the process when they have the ability to like go through the whole step by step process that you walk them through, as opposed to like, oh my gosh, Jennifer said they need a pre-approval, they're getting an offer in. You have nothing, you can't really do
Mm-hmm.
anything but just rush then. So let's talk about the process. I think it
Exactly, and
really. Oh, sorry. Go ahead.
let's do it. Yes.
So go ahead. You dive in. So
No,
what is the first
let's jump
step?
right into the normal process.
Yes.
So typically buyers that I'm talking with, they are coming from a realtor. They're already working with a realtor, and they're being recommended to me to have conversations and start the pre-approval process. Majority of buyers that work with loan officers will go to a realtor first, and then get the pre-approval, because it's really the realtor saying, hey, this is great that you want to buy a house, but let's get a pre-approval before we can really make headway. And so once once I have a buyer that I know I'm going to be talking with, I always want to start with a very informal, quick phone call, just kind of a get to know their situation, get to know them and their employment, what their timeline is, how experienced they are in the home buying process. Really just allows me to meet them where they're at and to meet their needs rather than kind of a one size fits all approach, which nobody likes to feel like it's just a robotic. Nobody wants to hear someone reading from a script, so that's not my flavor whatsoever. By asking general questions about the buyer's jobs, how they're paid, what their pay structure looks like. I also want to ask about the funds that they're planning to allow me to customize the pre-approval process to their scenario rather than and be proactive in it rather than reactive and saying, all right, well, answer these questions and then I'll volley back a few questions to you and a few document requests and kind of a do-si-do all the way through. It allows me to be more efficient in the overall process. And I always leave room for buyers to ask me any questions that happen to be on their mind. They're depending upon their level of experience with the home buying process. There could be a whole spectrum of questions they come up with. And an important one that I always ask when I'm working with somebody new is what they expect from me as their lender and how I can best support them through this home buying process. It's not a question that most are prepared to answer. A lot of times it's, well, I don't know, I've never really thought about that. But as they kind of think about it a little more, or we revisit it before the end of the phone call, it's real. A lot of times it boils down to honesty, communication, openness to asking questions. All those things are mantras in how I work with my buyers.
I
And
think,
then wrapping up
oh,
that
sorry.
phone call.
Sorry, I was just going to
I
say,
was
I
just
think
saying
it's so
the final
important.
thing is that phone call. I want to lay the groundwork for the kind of three steps in the pre-approval process. One is gathering of info, and I'll go more into more detail in the shortly. But first is gathering info, and then it's me reviewing and analyzing, and then following up with the pre-approval conversation.
I think it's so important that you had that first phone call too, because it really is not a one size fits all by any stretch of the imagination, right? Like there's so many different, different ways people could be earning money, different people that they work with, one partner or the other, debt situation. And I really like that you start with a phone call. I know in
Mm-hmm.
today's world they could probably go online and do most of this online, but I think that it's really a trust relationship. And I like that you start with a phone call to kind of talk through all those things.
Yeah, absolutely, and it's valuable just to know that there's a human being that's on the other end of the line, not just a number. Nobody's just a number to me, and I don't want to be just another loan officer to that individual. I want to be. My goal is that yes, this is the first time we're working together, but I want to be the one that you're calling in a couple of years to refinance. 5, 10 years down the road, as you're looking to move, I want to be the lender that you trust going forward.
So let's talk about, you said the first step would be gathering of documents after the phone call. So what does that look like?
Yeah, so the first step is really the buyers providing all of the information that I in determining the pre-approval. So that begins with I send them a link for an online application. It usually takes less than 30 minutes to submit information. It's kind of an on paper documentation of your personal information, contact info, employment, and residence history, as well as real high level estimates on the are being utilized for the transaction for the purchase. Um, that portal then automatically prompt to start uploading some basic documentation such as IDs, pay stubs, W-2s, and bank statements. If somebody currently owns a home, there will be additional items such as mortgage statements or insurance documents. But in terms of the customization, because of the initial phone call I've had with that buyer, I might have to add in or tweak some additional items. It depends upon their employment type and pay type. It may require additional documentation, additional W-2s, additional pay stubs, additional tax returns. Might be, but for the general population, it's not required for that. But it just allows me to review that application in real time and update the document requests again, rather than going back and, all right, provide these 4 basic items, and then I'll review everything, and then I'm going to follow up with requests for 3 more documents. And
That gets to be such a
I
frustrating process, right? Like
did,
when you feel
while
like,
that some of that's inevitable, I want and avoid that to make it efficient.
yeah,
Hmm.
sorry. Um, but
For
yeah, that's
sure.
such a frustrating process. Like if they you keep like having to say, oh, this and this and this, and that's why that conversation leads so nicely into when you upload documents, right? Because you're going to say, okay, yes, but going in, I'm going to need these things from you also.
Hmm.
Um, and what was I going to say? So let's
Exactly.
say
Exactly.
when you start the process, and so they upload the documents. You said it takes like 30 minutes a lot of times. Is that right? About how long?
Yes. So the in terms of answering the question for 25, 30 minutes, it may take less if there's only one borrower in the application. It may take more if there is it's a non-spouse co-borrower. May take a little an additional phone call with them, but um, that's the application portion, and then the uploading of documents. That's all a matter of how readily accessible someone has those different items. Um, it could be everything from someone has online banking, they have online records of their pay stubs. Another 30 minutes and they have everything uploaded. Other ones may
Um,
have to utilize a work workstation, or go to a financial and get bank statement, prolong that. But it's really up to that individual how readily accessible they have those various documents.
and when they start the process, those they don't have to start over. Like let's say they have the majority of things, but then tomorrow they have to get something else. Like that's all saved there, right? It doesn't start all over.
Absolutely, absolutely. It's more the document requests. It's a living, breathing application. So if they complete 70% of it in the first sound and they have 30% left, well then we're both on the same page. We are both able to see exactly racing through those. I don't have to wait for the full document list to be satisfied before I can start the process. So I can't complete the pre-approval without all the documents, but I can still get it started before everything has been fully uploaded.
Okay. All right. So then let's move into that. So everything's uploaded. Then what do you do?
Yeah, so once the documents are being I look through them through the lens of an underwriter. Now, I'm not an underwriter myself. I only glean experience from working with mortgages, working with underwriters, and having them ask me questions, and thinking back on past loan applications I've worked with. But I really look for what are they going to have additional questions for, or what gaps or holes might there be in the documentation, because the critical piece of the documents is the information that was submitted on the application. So that initial 20 30 minute question filling application, the documents have to support the every aspect of that application. So I'm looking through that and really looking for things that an underwriter is going to have additional questions for, because
So it's
when an underwriter has a question, that's goes back to the bottom. If I can get out in front and look at that, it avoids some of those hurdles down the road.
so you're trying to make it as smooth as process when the underwriter gets it, like kind of determining what you think they might bring up a question, and then um, having that done before it gets to them.
Is it about the underwriter, about what an underwriter may
Oh,
ask?
sorry. Yeah, I think we get cut out a little. So I was saying,
Yeah,
you're trying to avoid the underwriter like asking questions, right? I mean, not that they won't ask any, but to make it
correct.
smooth, to make the loan to seem like they're more qualified or as qualified the loan as they are by
Exactly.
allaying the concerns.
Correct. So I want to look for some differences in pay, on pay stubs. Are there differences in the number of hours worked pay stub to pay stub? If so, an underwriter is going to inquire as to why. Are there large transactions in a bank account history? If so, an underwriter may ask for additional documentation. So at the minimum, I'm going to ask the buyer a little bit more about those transactions to get out in front and start anticipating what we might need when it comes to documentation down the road.
So I think that part of it makes
And
people
then
kind of
once,
nervous. But sorry, it makes buyers nervous. Like, oh,
mhm.
what questions are they going to ask? And is it going to get through underwriting? And uh, I guess, like, what do you say to allay people's concerns about that? Yeah, I mean, how do you handle that? I guess.
Yeah, the two sides to that. One is we'll never know what questions an underwriter will ask until there's a human being underwriter on the other side. It's still there is still a human component to the underwriting process. A large portion is, for lack of better terms, automated, but there's still a human, and there's some judgment calls that are made. So there's never a certainty as to what exactly an underwriter may look for. And also, it's something like, well, if someone is a little bit hesitant because they're unsure of what an underwriter may ask, then they may not be they may not be ready to buy a house. So it's something where everybody who wants to buy a house, everybody has to be pre-approved through an underwriter. So it's just kind of like, suck it up and let's do this together. There's nothing scary. There's nothing that's going to show up on, there's not a report card. Oh, this person is a D minus applicant for mortgages. There's no report cards for things like that. So there's no risk involved. The risk is not knowing, and that could be harmful, not knowing what could have been. So trying at minimum, we'll find out exactly what it is and what the underwriter is looking for.
I love that. That is such a great way to look at it. Like, that is the risk of not knowing. And I don't think people should assume one way or the other. And I think, like, I know with Michelle and I, we only work with a few lenders primarily. Like, if we have clients who need a lender, we send them only to a few, and they're people that we know that are going to be their advocate. Like, so you're their advocate with the underwriters. You're going to be most
Mm-hmm.
prepared. And also that you're just like really nice people that they would never feel any judgment. I don't think most lenders would do that, but I know the ones we work with 100% would, because I just, I know you, that
Mm-hmm.
you you're there to serve. And if you can't help somebody at that moment, you're going to maintain that relationship, but you're never going to think like, D minus, why are they here? And so that's why I think it really is
Correct.
important.
Correct.
Yeah, that you go to the right lender who, is
Mm-hmm.
going to be your advocate, who's technically really good, but and then it's also going to like walk you through with kindness if you need it. Not everyone needs, is
Mm-hmm.
fearful. Um,
Exactly.
so the underwriter has
Because
it.
we're all in it together. We all want, so we all win by completing the loan. And it's not a win if I set up a loan file that's set up to be denied by an underwriter because I didn't take enough time, or I didn't put enough effort, or ask the right questions of the buyer. And I don't want it to be a poor experience for the buyer, because again, I'm looking for a lifetime relationship with that individual or those individuals. So we're all motivated. All three parties, you as a realtor, Jennifer, the buyer, and then me as a lender, we're all motivated to make it as efficient and pleasant experience as possible.
Yeah, 100%. I think that is really important too when people are working, with, if you have a lender first or you have an agent first, and if they, when you're kind of completing that triangle, that you use your recommendations. Because like, I know that the lenders I recommend, like TJ is someone that I like trust him. I know that, like you said, we're all on the same page trying to get him through. And so I think, like, if I'm giving you guys a recommendation to call TJ, you should be really comfortable doing it. Same way, hopefully, if TJ is saying, oh, use Jennifer, that, he's going to have the trust that I'll take care of his
Absolutely.
clients too. All right, so the underwriter has it, and let's
Mhm.
say, so what happens once the underwriter has it? They have their questions, then what?
Well, in the pre-approval process, there's not a human underwriter yet in this process. So everything that I'm reviewing is all within me and my review. Now there is an automated underwriting system called AUS that is utilized by most lenders, that looks at both Fannie Mae guidelines and Freddie Mac guidelines, and those are standardized national mortgage guidelines that are utilized for the vast majority of components when it goes to a pre-approval. Now, some lenders may only use Fannie Mae and they don't use Freddie Mac, but we have the opportunity to use both. But what that boils down to is, in my review of the documentation, once I feel as though I have identified the additional questions an underwriter might have, and I've asked questions and or received supporting documentation for those items, then I'm able to submit the pre-approval scenario into this automated underwriting system. And the system, it takes a few minutes for it to go through, but it checks every single question, every single number within that pre-approval, and compares that to the guideline for Fannie or Freddie. And if I've done my job to that point, going into that, I expect to get a green light and approval in that automated underwriting message. If there's not a green light on that, well, then I can go back and identify why isn't it being approved in this automated system, and what would need to be adjusted or corrected for it to be approved. And so that's where, then I may go back to the buyer and ask additional questions, ask for a supporting document that came up in that automated underwriting process. But once we have the green light, that automated underwriting is probably like a 95% confidence that a pre-approval will stick from that automated to the point where it does eventually go to a human underwriter and it gets final approved once you have the home under contract. So
Nice.
that doing that automated, there's still a chance that the human on the other side may come up with additional questions or look for additional documentation, or maybe for someone that isn't a straight salaried employee, maybe they will calculate income slightly differently than I have. But again, it's roughly with 95% confidence of what I have identified will remain.
I mean, which is so important, because then, like, when we're going out to look at houses, when somebody has their pre-approval, like, I want to feel comfortable, like, that their pre-approval doesn't say 450, but actually they're only going to get approved for 400, and that it's going to be a
Mhm.
struggle in between there. And that's why I really, it's so important that when we get these pre-approvals, knowing that they've run through the system, because then when we start to look at houses, I'm comfortable that the pre-approval is going to stand up. Um, and then are there any steps after that once you've got the green light? Then what happens?
Yeah. So there is a third step, but before I get that, just to kind of piggyback off of what you were saying in terms of having a pre-approval and feeling confident to go look at houses, the there are varying degrees of pre-approvals that other lenders may offer. Some lenders may do a pre-qualification, which is just a very simple pre-approval process where maybe they'll collect a pay stub, a bank statement, and pull a credit report. But they're not necessarily diving into everything and trying to uncover or look under each rock as an underwriter may. So that pre-qualification, generally it's not me and my company's philosophy to do that route, because there are more hurdles and speed bumps along the way with the pre-qualification than with going the pre-approval route, where there is more legwork in the beginning, more documents to provide in the beginning, but it alleviates so many unnecessary headaches after the fact.
Which I'm grateful for. um, and so once they have their pre-approval, they should feel pretty confident that that this is likely. And we'll get onto these. We'll get through
Mhm.
the next steps in future podcasts. But just once they have that in their hand, they should have a pretty good feeling, like, yes, this is going to move forward in a positive manner.
Correct. Yes. Yeah, and then
Okay.
going back to, so that, like, the third component of the pre-approval, because I don't want to just stop it with, oh yes, you're pre-approved for up to $575,000. Here's a pre-approval letter. I don't that doesn't go back to the initial philosophy of making it interactive, educational, and that ensuring we're all on the same page. So what I found to be the single most important part of the pre-approval process is doing a computer screen share with the buyer. So once I have reviewed and analyzed everything on my end and I know that they're pre-approved, I'll set up a time to 45 minutes to an hour to do a full screen share, and I'll walk through every component of the application and the pre-approval. So it's a chance to dive more into their pre-approval, for them to ask additional questions, and ensure that first and foremost that everything is accurate, because if something is incorrect on my end, then it needs to be corrected before it goes to an underwriter. So in terms of that review, we'll just kind of walk through basics, make sure we have employment information and duration accurate, timeline accurate. Look at their pay stubs to make sure that there's nothing that I am missing in terms of variance or a one-off item on their pay stubs. But then we'll walk through the credit report as well. For one, just a lot of people don't get the opportunity to see an actual credit report. So it can be really nice just to see what everything that's out there, maybe answer a question or two about how different things are impacting their credit. But then also seeing that credit report can point out some low-hanging fruit that may be leveraged in terms of adjusting and improving their pre-approval. So one of the biggest factors of someone's ability to be pre-approved up to a certain amount is their monthly debt to income. It's just an equation that a fraction that takes their total monthly minimum payments on debts and divides it by their gross monthly income. And say somebody has a couple of credit cards, small balances, maybe a couple $100 on each card, but their minimum payments are $30 on each. Well, seeing that credit report, we could leverage ourselves and say, hey, let's pay off these two cards over the next week or two, and then that $60 as a minimum payment gets wiped out and can be added on, and that could be an increase of another $10,000 on their purchasing power. So those are components that I dive into, really the debt to income. I also do want to lay out the total cash to close, so total amount of money that they would need to have at closing day to make the transaction, make the purchase complete. And so that would include their down payment. It would also include the loan costs. And I always want to take time to kind of separate out the difference between closing costs and loan costs, because every person may have a different interpretation of what closing costs are. And unfortunately, every lender may coin things or word things differently to make it seem as though their closing costs are supremely low, but when it comes out, they're just calling them a different name. So I want to give, again, that education piece. I'll show them my screen and say these are the costs that go into completing a loan with my company from pre-approval to closing, so that if they have any questions or if they've heard other things, they can see exactly what those costs and how they compare to a different financial. And then, it'll boil down to if they have submitted with a request for a particular dollar amount in their pre-approval, I'll, start by saying, yes, you are approved for the amount that you had requested, or no, you're not. However, this is the amount that we could get to with the pre-approval. If someone was requesting a 575 pre-approval, but I could approve them up to 700, I'll show them that. I'll tell them that, yes, you could be pre-approved for a much higher amount, because most often the maximum amount somebody is pre-approved for will be a lot higher on my end than what their personal max amount is. And just because the numbers say, I get a green light on the automated underwriting on my side, doesn't mean it's the right choice or the right scenario for their personal finances. So I always want to give them that feel to know what their purchasing power range is and allow them to make the determination as to what they're setting as their max purchase price. And then
There's a lot in
the
there.
very
Oh, go ahead. Do the
yes.
last thing, and then
And
I'll
I just say
comment
the
again.
very last thing I do with most pre-approval screen shares is I'll lay out on a spreadsheet, I'll lay out different loan options, hypothetical rate options. If in the hypothetical, if they were to be at a position of having a home under contract and we're talking about locking a rate right then and there, I'll give them an idea as to what the rates would look like and show them what the lowest rate option could be, as well as and range that all the way to what the lowest cost option, so the lowest closing cost option is, so that one, they can see what that will look like for down the road, that once they do have an accepted offer, I'll again lay out different loan options for them. And because we've already kind of walked through it initially, it allows them to be more confident and comfortable in making the right rate decision for them. And it ultimately shows, is it better to pay more money out of pocket now to get the best possible rate, or is it better to pay as little out of pocket as possible to maybe take a higher rate, but it makes sense in the short term, or somewhere in the middle. So really, it's just kind of a walkthrough, a sloppy copy of what it will look like when they are ready to lock in a rate.
I think, yeah, like I said, there's so much there. First, like you were saying when you're saying about people approved for often higher, which one of the things I really like is like I know TJ's not pushing them to just go to their highest, that you're really meeting people where they're comfortable and just giving them the facts because they might want
Hmm.
to push a little above their comfort level if they're trying to get a house or but not encouraging like to go their max dollar amount, but understanding that this is part of the family decision of where we want to end
Hmm.
up. And I think too, like people sometimes think it's like a one set thing. Like this is my price, this is my interest rate, this is what my mortgage is going to be, and I really like that you walk through the different options because it really gets them ready to put offers in when they understand. Well, how much do I want to put down, or do I want to put some of that aside
Hmm.
for like my closing costs, or how much would I have for an appraisal lab? Do I have flexibility there? So I know I really appreciate as an agent that you're doing that ahead of time because it helps them understand even once with the pre-approval, there's flexibility in rates, maybe not rates, but like down payments and the type of loans that they
Hmm.
have. And it really makes them better prepared to write a really strong offer. Um, and then
Yes,
the
absolutely.
other
Yeah,
thing, oh, sorry.
I'll say that goes back to the importance of having all three parties working together. Is just as you were saying, Jennifer. I'll show them what a pre-approval looks like scenario, and then say, hey, yes, you could go up. You could structure your offer this way with a appraisal gap because you have additional funds that you aren't planning to utilize for your down payment, but you have that accessible, so that allows you to be strategic and potentially leverage that to make a stronger offer, or maybe it's a way of on your offer you can leverage and say that you are going to use more as for a down payment because you have the funds available. It doesn't mean that you have to do a loan for that same amount, but it just allows, yeah, different iterations on what could you one could leverage to ultimately make their offer stand out in the competition. And that's, I touch on that a little bit and really allow, Jennifer, you on the realtor side to reinforce that and provide your input based on what you know about the seller situation or potential competition to right size the offer, as make it as
And
competitive
that's
as possible.
it's so important that I like that they connect us in the process so that hopefully that they don't feel like, oh, I don't want my lender telling anything to my agent. Um, and if there's things that they would tell their lender, they don't want us to tell their agent, they would just tell TJ that he wouldn't share that. But as far as like the process of like what they're qualified for and how flexible they are with down payment and that
Hmm.
just makes all of us stronger that, when we have a good communication line. Um, and then so the one other thing that you said in there that you talk with them kind of about their credit report, like if they're like they let's say they sat down and they went through the credit report after the pre-approval and you said you could fix this and this, like how long do they have to make those fixes before it can affect what they would get pre-approved for?
Well, a lot of times, well, the majority of those fixes are paying off balances on credit cards or maybe personal loans. Um, and those shorter term fixes solutions could be a matter of a couple of weeks. That there's the ability for, if tomorrow a client pays off a credit card, and then it takes a couple of days for it to post, but then I can leverage a tool that we have access to where we can have the credit report company contact that credit card company and get updated balance information. And if it comes back and shows like that card is at a zero balance, well, now I can remove that debt obligation from their pre-approval. It doesn't necessarily change the credit score. It wouldn't change the credit score in that scenario, but it would better their purchasing power by removing that debt. So it's something that could be, a week or two for someone to see a significant increase in verification of their purchasing power. If it's somebody who maybe their debt to income is just too high and they're looking for not a short-term solution, maybe it's refinancing a vehicle loan to then pay off credit card debts. Well, that's something that may take a couple of months to complete the process of paying off and seeing that reflection then on the credit reports. That could be a situation where we're putting a pause button on the pre-approval and say, this is where you're at right now. If this isn't really what you would like, well, then these are items that are at your disposal, options that you can move forward and accomplish. And let's circle back when you have completed those, and we'll evaluate, if it's the right time to retrieve an updated credit report and look for updated credit scores that would help accordingly.
Um, I think that's so valuable to understand the difference there. And I think, like we kind of like to circle back to where we started. We talked about like, don't wait till you have your house to get your pre-approval. And I think like what you've given so many opportunities and shown so much is where um, they can make the process not only easier and smoother, but also like really improve their standing as
Hmm.
in getting a loan by doing small things. They are not necessarily small things, but maybe doing things that will improve, like you said, their debt to income ratio, or understanding, how much money you need down, or the options between
Hmm.
down payment or appraisal gap. And I think knowing all these things really, if you get on it and get your pre-approval when you're starting to think about home purchasing, you're going to be a much better educated buyer and a borrower both. But you'll understand the process a lot clearer. um,
Exactly.
did you have any other kind of wrap up thoughts on that, or?
To build on that, the sooner that anybody gets started in the process, it allows more time for all parties to internalize, and more time just to think about the loan scenario, the pre-approval. So, maybe an example, if someone's rushing for a pre-approval on a Friday night, because I'm pushing the envelope in terms of my timing, I may miss out on thinking about an option that's kind of in the back of my brain because I'm so focused on just trying to complete the request that's in front of me. Whereas if that same request were to come through middle of the week and take a few days to search for the pre-approval options, there may be a new solution that pops up, or at least maybe not a better one, but maybe an alternate to consider rather than just the one that's staring us in the face. So more time, and then the buyers could have more time to think about questions, to ask me questions, more time for Jennifer, you and I to talk about the offer potential, the pre-approval potential. So more time just makes everything. I keep saying more efficient, but more efficient and as seamless of a process as possible.
I think too, like I'd be remiss if I didn't mention the other reason, like in our lender crew, like TJ is really a creative lender too. And I think like maybe people sometimes think that it's like check the boxes, send it in, but there's really a lot of creative thinking to figure out the best solutions for people.
Hmm.
And that's like one of the things that I really appreciate is, like you're creative in the solutions and to getting them to the right point. Um, so I think we pretty much covered all the bases of this piece. So
I
our
think
next
so.
piece
Yeah.
is going to be, now that they have the pre-approval, we're going to look at houses. Then what happens when they get an accepted offer? But we'll dive into that next month. But I really appreciate this deep dive, TJ. I think it's really eye-opening and really helpful for people to understand what the process is and to give them comfort. And I think sometimes it's one of those things that's just uncomfortable to start, not for any
Hmm.
specific reason, but I think this is really giving people a lot of information.
Yeah, absolutely. And if anybody is listening to this, that while you may not, if you're not in a position now to submit a pre-approval, feel free. My contact information will be tagged to this video. Feel free to reach out to me, and I'd be happy to answer some general questions. It's hard for me to give any specific answers without an application, but I'm always willing to talk through questions that somebody might have that may move them from being cautious and unsettled to start the process to spurring some movement and feeling more comfortable about a timeline to begin that pre-approval process.
Absolutely, yes. TJ's, all his information will be in our comments. Otherwise, you can reach out to me and I can get you to TJ. But thanks for watching. Thank you, TJ, for being part of the 262 Market
Thank you for
Report.
having me, Jennifer.
Yeah, and thank you. TJ's a little under the weather. You can't really tell, but I appreciate you taking the time to do this. Talk to you soon.
See everybody.
Bye.